Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. It's Thursday. Man, this has been a rough week for me. I am not going to lie. This has been a rough week for me. The rates have been going up to my bewilderment, and there isn't really a very good reason for why things are moving the way that they are. It just looks like there's some demand in the treasuries. The correlations ain't really making sense. But today is an important day. We've got ECB just kind of came out. It looks like that is increasing rates here a little bit. ES looks happy too, by the way. We have jobless claims here in 10 minutes. So, by the way, David, welcome. Welcome to the stream. I see your name is green. Thank you very much. Hey, so let's come and look at the volume profile. Yay. So yesterday, let's start in the evening. Yesterday, pretty good sell-off off of the open. You can see, it's right? No, it's right there. Okay, yeah. So there was a dip overnight. Good sell-off in the open, took us to a new low, and then we spent the rest of the day recovering. They almost made it back up, but it looked pretty good. Now overnight, another new low, and we're pushing up. So I don't know, Dow theorists, that's a pretty good line right there, but I don't know, looks like they broke it. Doesn't really matter. Things have been really bad for equities this week. And some of that is maybe a little bit expected. Delta kind of hurt us, and we're in a seasonal down period. So that's how that happens, right? Now, over to the treasuries. Treasuries yesterday moved up, and the 10-year auction was really strong. So I don't know where all of this demand from on the 10-year auction is coming from, but apparently there are some funds and people there's just more demand for these 10 years than I expected, at least. Now ECB, it is appear to be hawkish. We'll go and we'll read what's going on there because that all happened while I was eating. And then just remember that the 10-year has been popular. Today we get the 30-year auction, and that might not do as well. All right. Also note that we are steepening back up a little bit. Just a little bit. Just a little bit. It's not helping my position too much. I'm still down like $20. Okay. That's okay. Oil. Hey, oil's having a little bit of a spike. Maybe something's going to happen there today. I don't know. They've kind of been range bound lately, though. Gold and silver. Gold has recovered and caught back the 1800 mark. So there's that. Hey, and silver doesn't look so bad either. Copper's looking good. Hey, copper and silver, they look like almost mirrors of each other now. Past 2 days. So maybe metals complex. Recovering a little bit. Well, let's see. I can see oil has come down at the moment. Oil might be the place to be today if you want to be where the battle is, because it looks like oil's kind of in a decision point. Yeah. Morning, Caleb. So we're going to have the ECB press conference. Won't that be interesting? Okay, so I'm just noting as I'm coming through here that our 30-year did not get hit as hard as we would like. So keep an eye on that. Let's come in here. China State Reserves Administration putting crude oil reserves on the market through open auctions will better stabilize the domestic market supply and demand and guarantee energy security. Oh, that's why oil's getting hit right there. Okay. The 6 reasons why Jim Cramer is concerned about the U.S. stock market in September. We'll read that here. ECB, I'm not seeing. The ECB slows the pace of PEPP purchases compared to the prior 2 quarters. Okay, they did. They straight up just reduced purchases. That was about 30 minutes ago. Okay, cool. That's okay. So I think that we're all in line here. Let's read all of these. ECB is ready to tweak all of its tools as needed to ensure that inflation remains stable at its 2% objective for the medium term. Okay, let's turn on the text-to-speech too, by the way. TLTRO 3 in particular remains a popular source of finance for banks, enabling bank lending to businesses and consumers. It will buy PEPP at a considerably slower rate. APP purchases continue to total 20 billion euros every month. The ECB slows the pace of PEPP purchases compared to the prior 2 quarters. ECB's President Lagarde will comment on considerations underlying these decisions at the press conference later today. Underlying inflation must be consistent with 2% medium-term target. APP to run until shortly before key interest rates rise. ECB is catching a bid in the immediate aftermath where ECB confirms the reduction in the base of PEPP purchases. Sell the rumor, buy the fact rings true after heavy selling in recent sessions. Yes. Okay, gilts and U.S. Treasuries stay on the defensive in recent trade. Hawkish Bank of England comments on Wednesday evening weighing on the former while 30-year Treasury auction and corporate supply looms. Although, note the solid turnout for Wednesday's 10-year award. They're going to be corporate supply is going to come out here? Wait, how do they know that? Is that like a thing that happens on a regular basis? Like the corporate supply comes out on Thursday or something? Leon Cooperman says bonds are totally mispriced. He is still a fully invested bear and he has a very big exposure to energy. He defo copies Kaplan's portfolio on eToro. Really? Well, that's interesting. Well, I can see here that now that the ECB move is over, that they're pushing all the way back, and it looks like the 10-year is pretty much back to where it was just before the ECB news. So what do you make of that one? Complete retracement. Five-year deltas. Or the robot. Yeah, let's turn the robot on. Thank you, Win. You know what? He hasn't really been taking trades until like the end of the day. So I'm wondering if there's an issue with him. I think I need to go and take a look at him again. It's just not, it just doesn't do what I expect it to do. Okay. 6 reasons. Negative pre-announcements, the Fed, higher rates, Congress, fresh supply of stocks, geopolitical worries. Oh, you know what's another thing that's happening today? I don't know what time, but apparently Biden administration is going to be coming out with new rules and guidelines. And there is some concern that the guidelines that they're going to put out are going to be extremely divisive. I think that they're going to say something about school vaccinations. I think that they're going to say something that it is going to be, that unvaccinated people are going to be very unhappy about. Is the Biden administration going to fill what is at the heart of its agenda? It should not be, Powell says. Stiglitz calling current governor Alabama. Yeah, okay, so yeah, there's more of this thing. The liberals don't want Powell in there for whatever reason. They want somebody that's more dovish, I guess. Well, it's not that they want somebody that's more dovish. They want somebody that is willing to overstep the Fed's mandate and actively support through monetary policy their domestic socialist agenda is really what it is. Here's the problem, though. That's not going to be Lael. Wait, let's see here. I mean, she was nominated by Obama, but okay, so there's the news. I'm sorry, I didn't have my thing going. Jobless claims. I'm not getting it yet. Come on. Must have been good. $310 versus an estimate 340. Right. Good morning, AO. Okay, so now that that's over, I can consider if I want to get into the 10-year again. I don't know. It looks like that the treasuries look bearish. And the ECB press conference is going. Ready to tear up a Thursday? I'm not. I was thinking really hard yesterday. I was thinking really because this trade hasn't been so happy for me. Let's just say. But I was watching some videos about streams and things like that, and I was also reading stuff on Futures.io about like YouTube channels and stuff. There was one guy on a Futures.io thread was really convinced that a certain guru of his was really good, and people in there were saying like this guy claims to be trading live and they're clearly sim trades. And they were arguing about that. But I was thinking about it. I was like, like the thing that's so funny about that is that nobody cares if it's sim or not. As far as I can tell, the audience doesn't really care if it's sim, unless you if you went out and you made some really big bets and put them out on social media and you became popular because you did something crazy or you had some crazy moment, then maybe if that's why you gained the audience, maybe they would care. But overall, it seems like how much views you get on your YouTube video is like nothing to do with your performance or whether it's live or sim or any of that. And it only has to do with how well you target the keywords and how attractive your thumbnail is. But then I was thinking, like, my videos where I'm do terrible are usually get more views. They usually do get more views. So I'm thinking what we should do is we should just always act like I'm the most awful trader in the world. Yesterday, Meet Kevin was living at 12K views. I know, right? Well, how long has he been around for? I was kind of under the impression that he had taken off this past year still. But like the whole thing is that there's kind of this point where you get to like 5 to 10,000 subscribers, and that is a point at which you have like viral potential, which means that like we have enough subscribers. I go and I post a video, and you guys all comment on that video, and it starts to show up as a recommendation on people's homepage, and the thumbnail and the subject and everything is attractive enough that it gets shown to hundreds of thousands of people, and you gain way more subscribers than you ever thought was possible, right? And I think that that's what happened to most of these people. So we're kind of in that area, but what we do was also so very niche that it's very unlikely to ever gain that degree of attention. But my one-off videos could, if we had a really good one-off video. The very nature of trading live stream must mean that people do not go back and watch what the market did once the market trading is over. So maybe the idea is to use another format for viral potential. Yeah, exactly. But see, this is where I was saying that, like, hey, like, if we wanted to try and attract more people to the live stream, we could make thumbnails and titles that just say that, like, I'm such a terrible trader, right? Stay niche. Well, this stream will always be this, for sure. The stream will always be me trying to get better at trading treasuries. I'm pretty happy with this trade that I got in the 10 years so far. I kind of wish that I had done two lots and taken 5 here. That would be nice, but Lagarde used to read off paper. Now she has a teleprompter. That's good. Says Forex Live. No ECB. Would you like to hear the ECB? We probably should have the ECB up. Kevin's right. ECB Governing Council press conference. I'll come over here and stop financial juice for now. So I'm gonna put her up here and cover up equities for now, if that's okay. Or would you rather just not see me? Start scalping the NQ for 3 ticks and do 100 trades an hour. It would be fun to watch. Okay, wait. Let's see here. Oh, I hate it when that happens. Freaking Jigsaw when it does this is so annoying. Oh, jeez. There we go. Okay. Well, turn the volume on there. Now you can
mainly
hear.
reflects strong increase in oil prices since around the middle of last year, the reversal of the temporary VAT reduction in Germany, delayed summer sales in 2020,
And I will
and
get
cost
rid of
pressures
me.
that stem from temporary shortages of materials and equipment. In the course
Your
of
beard is growing up
2022,
nicely. I didn't realize you were looking
these
so mountain.
factors should ease
No,
or will
I'm just
fall out of
lazy.
the year-on-year inflation calculation.
It's time to
Underlying
shave.
inflation pressures have edged up.
You
As
guys
the
have been
economy recovers
saying stuff about
further
that, so this
and
time I
supported by our
will
monetary policy
trim it a little
measures,
bit longer.
We expect underlying inflation to rise over the medium term. This increase is expected to be only gradual, since it will take time for the economy to return to operating at full capacity, and therefore wages are expected to grow only moderately. Measures of longer-term inflation expectations have continued to increase, but these remain some distance from our 2% target.
Wait.
The new staff projections foresee annual inflation at 2.2% in 21, 1.7% in 22, and 1.5% in 23, being revised up compared with the previous projections in June. Inflation, excluding food and energy price inflation, is projected to average 1.3 in 21, 1.4 in 22, and 1.5 in 23, also being revised up from the June projections.
Okay, hold on.
Let's turn to the risk assessment.
I can't go more than 2 weeks. Well, it's been about 2 weeks, yeah. This is about 2 weeks.
Balanced. Economic activity could outperform, and expectations if consumers become more confident and save less than
I think I
expected.
Successfully crashed Jigsaw for once.
In the pandemic situation could
Okay,
also
wait, I
lead
got it.
to a
It's
stronger
good.
expansion than
Okay.
currently envisaged. If supply bottlenecks last longer and feed through into higher than anticipated wage rises,
All right,
price
let's
pressures
just try
could be
an
more
easy one here.
persistent. At the same time, the economic outlook
That was
could
exciting.
deteriorate
Was that exciting to
if
you?
the pandemic
Did you see them
worsens,
take me out there
which
like
could
that?
delay the further reopening of the economy, or if supply shortages turn out to be more persistent than currently
You
expected.
still leave a shadow in the military and you
hold
get in
back
trouble for it?
production. So let us look at the financial
No, I don't
and
use a
monetary
moisturizer.
conditions now.
I do
The recovery
tend to
of
put
growth
oil
and
on it.
inflation
Though I
still
ran out of
depends
any to buy
on
more of that.
favorable financing conditions for all sectors of the economy. Market interest rates have eased over the summer, but reversed recently. Overall, financing conditions for the economy remain favorable. Bank lending rates for firms and households are at historically low levels. Lending to households is holding up, especially for house purchases. The somewhat slower growth of lending to firms is mainly due to the fact that firms are still well-funded because they borrowed heavily in the first wave of the pandemic. They have high cash holdings and are increasingly retaining earnings.
I don't use
which
any of that
reduces
crap. I
the
wear
need for
Dior when I want to be
external
fancy,
funding.
though.
For larger firms,
Hey, was that one a
issuing
winner?
bonds is an attractive alternative to bank loans. Solid bank balance sheets continue to ensure that sufficient credit is available.
Cool.
However, many firms and households have taken on more debt during the pandemic. a deterioration of the economic outlook could threaten their financial health. This, in turn, would worsen the quality of banks' balance sheets.
Are you not entertained?
Policy support remains essential to prevent
Raise
balance
them
sheet
rates.
strains
That's what I'm saying,
and tightening
man.
financing conditions from
But look,
reinforcing each other.
somebody really doesn't want these rates to
In
rise.
conclusion, the euro area economy is clearly rebounding.
Structurally,
However,
it
the
doesn't
speed
seem
of
like the volume
recovery
is really
continues to
too
depend
big right
on the
now,
course of
but
the pandemic and progress
they're
with
like leaving their
vaccinations.
offers weak and letting it
The
rise.
current rise in inflation is expected to be largely temporary, and underlying price pressures will build up only gradually. The slight improvement in the medium-term inflation outlook and the current level of financing conditions allow favorable financing conditions to be maintained with a moderately
do the
lower
poll
pace
again?
of net asset purchases under the PEP. Our policy measures, including our revised forward guidance on the key ECB interest rates, are key to helping the economy shift to
There's the
sustained
poll.
recovery and ultimately to bringing inflation to our 2% target. We now stand ready to take your questions. Thank you.
Thank you. And today the first question goes to Tom Fairless of the Wall Street Journal.
We got 45 minutes more of this, I guess.
Hi, thanks very much for taking my question. I had two questions. The first was on the pace, on the discussion around reducing asset purchases. And some of your council members have suggested that they would like to see the PEP program coming to an end soon. Would you characterize this, or did you characterize this internally as a taper, or is it a turning point, or how would you characterize the move? And the second question was around why you feel confident enough to do this. Your 2023 outlook for inflation is 1.5%.
So that trade that I just took there in NQ, my third winner, by the way. I don't think that one would have worked if it was live.
Delta around slowdown in China.
If it was live, it would have done something different.
Did you think this was
Straight up? Like when you look at the number of contracts trading and stuff there,
correct move? Thank you.
Might have made a difference. Do you think Lagarde is overestimating, underestimating inflation? Those numbers sound low to me.
I would preface my response to your first question by a quote, actually, in a way.
I do not think that the market, neither the market nor the policymakers are terribly concerned about inflation at the moment.
PEP, which I remind you is the Pandemic Emergency Purchase
Since when
Program.
do you trade NQ? Well, this guy came in here and he said it would be way more entertaining if you took 3-tick trades on NQ. So I said, hell, why the hell not? We can just go and put some sim trades on NQ and have a little bit of fun. So that's what I did.
That they remain favorable, and we do that on the basis on the inflation outlook. And as you rightly pointed out, our inflation outlook has been upgraded, and it has been the case for 21 significantly, 22 quite significantly, and to a lesser extent 23. But across the board, you have an improvement on the inflation numbers for the whole horizon.
Looks pretty happy about that.
We also look at other indicators, and on those accounts as well, there has been a significant improvement of the inflation numbers.
Yes, it was better / safer than yesterday's crazy NQ morning trap bulls and such. Yesterday's action in the equity indexes was a little
that we need to keep
messy.
Favorable financing conditions. This is the commitment that we have, and this is what we agreed in December. That hasn't.
You know what? So yesterday when we left the stream,
favorable financing conditions with
hold on. Why not
moderately lower pace of purchase, and of course the choice of words is relevant. It is moderately lower than what we have done in Q2 and
it's like, why is it not ducking? Okay. So yesterday, if you recall, I had a sim long in ES. Maybe I took that after the stream, but I had like a sim long in ES and I swung it quite far. But then the treasuries continued to flatten over here, and I was just so fed up with that. I was like, I don't even want to mess around with my sim trade in the E-mini anymore. It's just not fun. when my curve steepening trade is not winning.
Serious, of course, but
that this is not winning yet. This 35 is just, even though it's only like $20, is just like a severe point of pain for me. I can't stand that it's not working. And that I don't know why.
Is a recalibration of our pandemic.
You can't lose if you never sell.
Program for the next 3 months.
So look at that. Right there.
The next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, over to you, please.
Hello, and thank you for the opportunity, and nice to see you on Webex. President Lagarde, 2 questions.
Where's NASDAQ Trader this morning? He'd be loving this.
Conditions. For how long will the ECB preserve favorable financing conditions to support the recovery also after the COVID crisis? In a sense, will favorable financing conditions end with the end?
Are you trading without us? No. Well, because these are swing trades, I am managing the positions without you a little bit, yes.
Enters a new phase, as you have described, with the new Delta variant, but also better economic outlook and a good pace of vaccinations. Can you tell us a bit more how the Governing Council intends to judge and assess the end of the COVID crisis phase, given that PEP will end when the COVID crisis phase is over?
Oh, that one was bad. Bad excursion on that one.
Well, thank you. Thank you very much, and it's very nice to see you as well.
Wow, that one was close. That one was close. That's another one where maybe if that was live, they might have stopped me out.
Will be to actually see each other with appropriate distance between us. On the commitment for favorable financing conditions, I'll remind you that was decided at our Governing Council meeting in December.
Hero. Oh, hero. So hero. How are you, Uzi?
Emergency program,
a little late today, huh?
Very specifically designed for the circumstances that we have been facing, that we still face today, but that are currently clearly improving. And this commitment to the favorable financing conditions is one of the 2 parts of the joint assessment that we conduct to determine our pace of purchase.
What you got for me, Uzi?
And that operates in relation to PEP. And the day when PEP is over, which presumably by then will indicate that financing conditions are favorable, and that the economy will have recovered in such a way that the downward impact of the pandemic on our inflation.
One says, I know someone who knows someone who can't get an appendectomy in Texas because the hospitals are full with COVID patients. I'm concerned about my mother in Florida. It's not necessarily that there's too many COVID patients, though, when it's that all of the healthcare workers are quitting.
Symmetric, 2% medium term.
They've decided that they've had enough and they quit. But the final piece of the bathroom saga in place on Sunday, I had a little piece of wall that was exposed to water, repaired it, textured it, painted it, baseboard, and put it up. Uh-oh. Was there a leak?
The mandate that we have
you have to redo that whole thing?
As measured by our target of 2% inflation.
Should I roll my ES contracts over today or wait? So today it probably doesn't really matter, Zach. But I would recommend, well, I shouldn't use the word recommend. I personally am a lot more cautious about taking any kind of trade in the indexes when it's rolling over because the volume read gets really confusing.
What comes next.
So I need to have a really strong fundamental reason to be taking a trade.
In the months to come. And I think there will be more interesting matters that will be debated in December,
maybe right there.
For which clearly
too
you
late.
will be informed in due course.
Thank you. Next question goes to Alexander Weber of Bloomberg News. Alexander, please.
Them rates
Sander, can
coming
you
in.
hear us? Does not. Go ahead, please.
When is September ES rolling over to today, tomorrow?
President Lagarde,
Like today is the last day of the contract.
have recently emphasized the upside risks to the inflation outlook, and that the higher inflation could prove more permanent than.
Oh, bro, you need a real
Could you tell us whether
microphone.
this view is widely shared within the governing council?
Do you see
and
this
what the
guy
discussion
here?
is like
Oh,
at this
sorry.
week's meeting? Then
Get a real
question
microphone.
on your monetary stimulus. How much notice will you give markets before
Who
that
is he?
comes to an end?
Sorry, I completely missed your second one. How much what?
How much advance notice will you give markets before the PEP comes to an end?
Who was that?
Okay. Well, thank you for the
Which
first
should
question, because I'm
we
going
should
to
start
take
a
advantage of that one
GoFundMe to get
say a
him
few words
a
about inflation
better
and
microphone.
how, we conducted our discussion on inflation, because it is a case that in many
If I knew his name, if I knew who it was.
seeing prices increase, and they can feel it. So we have to really go under the skin of inflation before we actually assess whether it is temporary, whether it is going to last, and that leads us to the conclusion of our inflation outlook, which, as you know, is 1.5 at the end of the projection horizon. So what do we have at the moment? We
Okay,
have
so let's see
essentially
what
three
the rest of
factors
Uzi's
that
story.
are driving prices up. The first
As
set
I
of
put that
factors
baseboard up, I felt
to
accomplished,
the
all done, right?
reopening
For
of
every
the
second,
economy.
our
And this is
AC...
the underlying
Oh,
dynamic. It
what?
went down massively, and prices, by the way, at the time also
So
went
after getting a
down.
new master
The
bathroom
economy
built and a new roof
reopened,
put up, I have to get a
and
new
from
AC
a
installed
supply
this
point of view, from a
Saturday.
demand point of
Oh,
view, of course, there is pressure on prices.
man,
You can
that
see that
sucks.
in what we call the base effects.
And did
And
insurance
that has
cover
to
any
do
of it?
with energy prices, which constitutes a large component of these base effects. Inflation.
Looks like the
impact on
treasuries are
inflation.
finally
You
making
can
a
see that on
significant
the,
move, huh?
German VAT impact, which obviously will continue to play out until the end of the year.
It
You
hasn't
see that in the
steepened
carbon
too much
tax.
yet,
It was
but
decided
I
also,
think
in
that
Germany.
30 is
So
getting
those are
creamed
the,
here, so I'm hoping that
base
it'll come back.
effects, reopening of the economy related factors. As part of those reopening of the economy factors, I would distinguish supply
Justin from
bottlenecks,
CNN Politics, President
bottlenecks,
Biden to announce that all
effect.
federal
And this is
workers must be
something that,
vaccinated with
the
no
corporates
option
and
for
companies
testing.
Are telling us, are telling you, there are bottlenecks effects, and not just in the semiconductor business, but in all sorts of sectors.
I don't want to
that
file a
are
claim on the
more or
AC.
less affected depending on how much they rely
A claim on the
either
claim?
raw materials or equipment that.
Oh,
they
you got a
get
buddy
their
with an
supply
HVAC
from.
company hooking you up. All
And
right.
this is impacting the durable and
Well,
non-durable
will you
Now,
get better AC
how
out of
strong
it?
will that effect be?
Because that's a win if
How
you get
long
better
will
AC out of it,
last
right?
Is something that obviously remains to be seen, and we have.
Man,
put that
if I
particular
lived in
item,
Florida,
if
I would
you,
100%
remember
be
the
over your house
monetary
helping
policy
you
statement that I
this
read for you,
Saturday.
we have put
That
in
actually
the,
sounds
in
fun.
The inflation
It
analysis,
actually
where we
kind
say
of
that
sounds fun to
if
help you do your
those,
AC.
supply bottlenecks last.
I think this weekend,
longer,
though, I'm either.
than expected. Then
Well, I think I'm going to
will
try and.
and,
What is the word?
It will
I think I'm going to
increase,
try and enlist my parents to help me
prices and
record
will
this
have,
weekend.
An upside pressure.
My old unit is
But that
21 years old. Oh,
we
man.
we're not certain, because typically what we have
It
seen
was-
in
it was
previous
overdue.
situations of that nature is that.
No, I think I'm
when
going to
when
enlist my parents to help me
have
try and record a
bottleneck on
video.
your
We're going to go
supply,
all Peter
you try
McKinnon.
to find alternatives to that supply,
But
and as a
maybe,
result of that, then the
maybe we
supply
have time
bottlenecks
to
impact of
get a
inflation
rototiller
is
and
reduced eventually goes away.
level out
In
the
same
garden
vein,
out
if
there.
it's, bottlenecks, inflation that applies without too much on the demand front, it's not necessarily.
Never seen my
going to
brother-in-law
produce
as
a
happy as when his
second-round
daughter
effect
decided to
on
marry an
wages in
HVAC guy.
particular. So that's the third one. The
bet
second
this
one,
is decent
which is
money.
a subset of the sort of reopening of the economic consequences. The third one, which is quite interesting as well, which is especially when
so
you
treasuries,
disaggregate it, is the
pulling
inflation
back a little
that
bit
is
for now.
related to services, because we have seen a reopening of the economy on the service front in the most recent month, and when you analyze where the
Okay,
inflation is in those
you mini
that
chill
segment of
out here?
services, you see that most of it is actually coming from what is subject to social distancing, which obviously has been reactivated most recently. So those are the three key drivers of inflation at the moment. But as you can see, many of them are of a temporary nature and will last for a period of time and will then either fall out of the period of reference or will fade out over the course of time. One component that we are addressing,
where's a good place to learn how to scalp order flow
attentively,
well,
is the second-round effect. Is the
there's
impact
so
that
many different
price
things you can do.
increases
So
will have on wage negotiations.
Hold on.
And that is
the way that you said
what
that
could
was
actually
different than the way
fuel
that
a
most
more
people ask this
persistent,
question.
and durable
I'll tell you, I started
price
out with the
increase
No
and
BS day trading
inflation,
course.
going
Also,
forward.
Jigsaw has a lot of good free materials out there.
On those
So
wages
those are
front,
two good places
we
to
are not
start.
seeing much,
You can
by
learn a
way
lot from
of
watching this
significant
stream.
increase. We will be
I've
very
kind of
attentive
turned
to
a
the
little bit more
autumn
into
negotiations that are
position
taking
trading
place
more
in some
lately.
countries. But at this point
If
in
you
time,
really want
we
to scalp,
don't
Gary
expect
Norton's
this
course
wage,
is
increases
really the
and these
best
wage
source, I think. But
negotiations to be,
it's very
very
expensive,
strong,
so
and
that might
we
not
see
be appropriate.
probably,
But you know what?
gradual
Like the
and
best
moderate
teacher is the
increase as a
market,
result of
and
that.
if you get a DOM up and
So
you start
that's what I
watching
really
it,
wanted to try
you
to
can learn a
explain to
lot
you in
just
response
from
to
that.
a question about
So, you know,
inflation.
what I would do if you're
Now,
really just
concerning
starting is just watch
that's
the order flow
a discussion
and
that
try
we
trading
will,
it for a little while.
address
And you might be
comprehensively
trying to
at our
trade
December
something that's
meeting
like a complete
as the term
BS,
of
but
PEP
you need to
approaches.
get the mechanics
We
of,
need
of
to
actually
obviously discuss the
entering
terms and
orders and everything
conditions
down
of
first.
how that
And then
occurs.
once you have that,
And,
some of
you will hear me
the
again
more
on this
like
matter,
mathematical
certainly at
theory
our
behind
December
some of this
meeting.
stuff will be it'll be easier to understand.
Thank you. Next question is for Annette
Would you recommend the
Reisbach,
No BS course of trading manually the indices? Well, so
Thank you very
I
much
think
for
that a
taking my
lot of what
question.
he talks
President
about
Lagarde,
is really is more applicable to
one
treasuries
is,
for sure.
if you read through
But
analyst notes,
it's
some are
still
a
going to be
lot less
beneficial to
optimistic
you in
about
the indexes,
2022
yeah.
in terms of economic growth. So what makes you so optimistic for 2022?
Do you think Jigsaw's worth the money? Do I think that the software is worth the money? Absolutely.
Risk of a stagflationary environment for the eurozone, given that.
All right, let me mute her for a second. Straight up, if I did not have access to a DOM as strong as Jigsaw is, I just wouldn't trade. I wouldn't even bother trading futures if I didn't have access to this. That's how important it is, I think. And I do have, for in all openness and transparency, I do have an affiliate link. You click the link down in the video description below. If you end up buying Jigsaw through the link, it does help the channel out a lot. So maybe I have an incentive to try and sell you on it, but I just, the way that you can move orders around and you're able to see all of the data that is important at the same time in the Jigsaw DOM, it's absolutely essential. I just don't know how else you trade. And these people that just trade off of charts, how do you do that? I can't do it.
Into 22 as well. We also make the assumption that bottlenecks will be circumvented by the economic operators in the first half of 22. We believe that we will be back to the pre-pandemic 2019 level.
Some people use
this year,
Sierra chart trying to replicate Jigsaw.
Earlier than
Well, it seems like that Sierra charts is probably an acceptable substitute, but it's definitely not as good for sure.
Production and in unemployment.
Which package? I think that you can just start out with the basic package.
So that gives
kind of depends on how much money you have to spend. I mean, like if the cost of the platform is really as a concern for you, then just go for the basic one. But some of these people, some people that come into futures, you have like, and a lot of people that come into this channel, like the funny thing is this channel has a real dichotomy. A lot of people that come in start out like me where even $100 is a lot to spend on trying to get into trading, right? But then you have these other guys that are like in their 40s, have already made fortunes and have hundreds of thousands of dollars to try and make it in futures trading. For that person, I would absolutely go for some of the more expensive packages. But
big drivers.
I think that that you get a lot with the basic package, and what I would do is I would get the basic package, learn how to actually use it and submit orders and everything, and trade with it for a few months, and go through the basic tools, and then after a few years, you might be frustrated, and if you still don't really understand the order flow concepts, then maybe some of the advanced series would be useful to you.
And the supply bottlenecks, which, as I said, we anticipate will be circumvented in.
That's why I like your stream. You are transparent. Oh, thanks, AO. There was somebody else on YouTube claiming that I was a quote unquote scammer because I have an affiliate link for Jigsaw, which I was just like the most ridiculous thing I've ever heard. It's like, oh yes, there's trading software, and I have a trading software that I like, and I recommend it to other people. That's so immoral or something. This was so ridiculous. Meanwhile, this person is offering multi, $1,000 indicator packages and $10,000 mentoring sessions that are just completely, absolutely worthless.
Not in actual
oh man,
needs to be pursued. And those, 2 million people still.
DeSantis says he is promoting free choice, but it appears to me he's doing the opposite by opposing local school boards for who voted for masks.
That is the ultimate response of this recovery.
I mean, is what the school board wants to do really free choice?
Thank you.
Although I would say that if I was in my position, if I was governor, I probably would let the individual school districts have ultimate say. I don't know.
Hello, Madame Lagarde. Can you hear me? Thank you for taking my question.
I'm really concerned about what the Biden administration is going to say today about restrictions. Like, it's a little alarming to me that they're coming out now when Delta is subsiding, when it looks like it's over, and they're going to impose new policies. It's like, what the hell?
Is about the link between the ending of asset purchases at the ECB and...
I'm a lot happier that the yields have dropped a little bit here.
At the moment, there's a close link in your guidance.
It's not great, but okay.
Purchases ending, and soon after that, interest rates rising. Do you think that there should be potentially more of a gap or more flexibility on that?
That would have been a fill.
Thank you very much.
Well, thank you very much, Martin, for this
That would have been a winner.
It gives me
Didn't
a
fill
chance
it.
to actually just repeat yet again, because I think it's an important consequences of our last July meeting, the three criterias that are applicable for our forward guidance on interest rates. And that forward guidance, as you know, has been modified and clarified to a great extent by including three criterias. One is we need to see inflation outlook at target, that is at 2%, well ahead of the end of our horizon, first criteria. Second, we need to see it through also to the end of the projection.
The most irrelevant thing on the planet is what Biden in Panama. Panorama. What is that?
Criteria as at the time when we make the decision. So you have these three criteria.
It seems like Western countries. Well, man, Australia and New Zealand are certainly like, what the heck?
And which actually play a role in signaling.
Oil's downturn is continuing.
What will be the sequence of events from asset purchase?
Gold took a little bit of a hit too.
To interest rates hiking. I think we are pretty far away from that, and it also gives me a chance to remind all of us that PEP is a very specific program intended for the pandemic. It has an emergency character to it.
Brannigan and Barrett pointing out that European bonds should have steepened on this ECB dovish taper. The fact that they are flattening makes me think we're going to see some risk off this afternoon.
The purchase program, the APP, which we have on a standing basis ever since October 2019. And that clearly is intended to be continued and will be debated, as I said, at our December meeting. So it's entirely premature to evoke it, and it has not been discussed on the occasion of this meeting. Now, clearly, when we determine our pace of purchase, we are attentive to the entire universe of bonds. We are not paying special attention to the fiscal commitment of one country or the other, or the bond issuance of one country or the other. So we look at the entire universe of bonds that are available, will be available, are being announced, and that's how we determine where our purchase pace is going to be applied. But we do so, as I said, based on two things under our joint assessment. One is the favorable financing conditions. The second is the inflation outlook. Thank you.
Thank you very much. And the next question goes to Andres Stumpf of the Spanish daily Expansión. Andres, please.
I'm trying to respond to Brannigan Barrett here on Twitter.
Yes.
Okay, I have two questions. You said that the need of...
What is the SYR contract? Or you mean the 5-year contract?
I would like to know if it was...
This one right here is the 5-year.
The pace decided.
So I have a steepener trade on where I'm long the 30-year and short the 5-year. But what has been happening is that the yields have declined, and so I made money. I ended up making money on the 5-year, and then I'm losing on the 30, right?
I was wondering if the ECB has taken any decision on this regard, and if there will be any long-term funding operations for the banks, any more operations, I mean.
On your question about the decision that we made today, as I said, it was a unanimous decision in all respects. So the pace of calibration was agreed. The moderately lower determination was agreed unanimously. It was all unanimous. So I'm sorry for those who like to oppose the doves and the hawks. Sorry for this time. There's not much that you can actually draw from dissenting votes because we all agreed. TLTROs, you're right. There will be one more operation in December, and we will clearly have to discuss what comes next on the basis of the situation at the time. And I think that will be part of the overall re-examination that we conduct at the time of...
How do I say this? Seems like the auctions have been more...
This will be, as usual, data dependent.
Crucial. It's like the auctions is what seems like it's been moving us lately.
Based on the discussions that we've had with representatives of the banking sector, is that TLTROs, certainly the earlier ones,
like maybe this changes around next week.
Have been critically important.
The EPP decision was unanimous in all respects.
To provide lending to the economy, which they have consistently done.
Are you guys good with hearing Lagarde in the background?
Thank you.
Thank you. And
oh, there's Ace. How are you,
to Ilias
bro?
Siakantaris of the Greek TV station ERT, please. Ilias, please.
Yes, can you hear me now?
We can hear you from Greece.
Thank you very much, Wolfgang. Madam President, with the winding down of PEP, a degree of flexibility the ECB has introduced into state bond buying will go away. This is particularly important for Greek bonds, as they're not yet in investment grade. Does the governing council think that it should be...
Do you think quant strategies account for the... No, I don't.
Lack of flexibility in respect with Greek...
That's not what it says at all. That's not what the inelastic market hypothesis says at all.
Well, I think it's really too early and
I think that the inelastic market hypothesis is really a comment on the fundamental nature of markets. The way that quant strategies work and everything else is really more a consequence of the inelastic market.
Analysis of the situation, and certainly the situation of Greece will be taken into account and addressed specifically. But I think it's premature for the moment to do so.
Thank you. And the next question will then be for Francesco Canepa of Reuters. Francesco, please.
Good afternoon. The first question is about inflation, which was 3% according to a flash estimate. Do you think the balance of risk for inflation has shifted and is now to the upside? And how was this reflected by the discussion of the Governing Council? And the second question is about the fact that many of your colleagues, including Mr. De Guindos standing next to you, have signed letters urging the Commission to implement fully and swiftly the Basel III rules for banks. Your name was conspicuous by its absence. Do you support their call, and including its timing, crucially, because the governor of the Bank of France said the timing of the letter was unfortunate.
Quants take advantage of the inefficient market or the inelastic market.
There's nothing inconspicuous about my name not being on the letter, because all those matters are addressed by my colleague and friend Andrea Enria, who is, as you know, the head of the SSM. He's the one who has full authority and much deeper understanding of those issues than I do. But I'm not uninterested in Basel III. And I've had my share of Basel III discussions when I was finance minister.
So now this is really interesting. We are back up into these 7 halves, 8s, but the rates didn't come all the way back.
Respect of the timetable in relation to these Basel III issues. But I will turn to my colleague and friends, the Vice President, who is also very, very close to that. I will address your first issue by quoting, because we discussed this sentence to make sure that we were all unanimously in agreement with that in relation to inflation. And we say very clearly in the risk assessment paragraph, if supply bottlenecks last longer and feed through into higher than anticipated wage rises, price pressures could be more persistent. I don't think we could be more clear than this sentence is.
Now, with respect to the letter, I have not much to add to what you have said, President. Well, the letter was signed by the head of the EBA, by Andrea Enria, and by myself as person responsible for financial stability in the ECB. And, it's crystal clear.
I'm just realizing, as I think about tweeting something to him, that,
and I think that,
I'm not telling him anything that he doesn't already know.
Three of us, of the three institutions. And as I have said before, we believe that this full implementation, this rapid implementation, will bring a lot of benefits for the banks and for the economy.
I think he might be right. You think that the E-mini is going to crater?
To Johanna Trey from Politico Europe. Johanna, please.
Thank you very much. Can you hear me?
Yes.
Thank you very much.
I can only say that it just doesn't seem like they're doing the normal thing. Yeah, so at one point we were up at 10, right? Did we ever get higher? Oh, I guess we did get up into the 20. Okay, never mind. Never mind.
Have returned to pre-crisis levels. Will that then be a sufficient condition for you to declare the crisis phase over? And then what should we all expect from November? What are you going to do during your November meeting?
What will we do with what?
November meeting, given that you're putting so much emphasis on December and suggesting nothing would happen.
I think it's actually October.
Oh, sorry. October.
Ouch.
Well, we will all get together around the table and we will assess the situation, because not a single monetary
kind of seems like, so I did try taking one there, kind of seems like the opportunities aren't there as much.
Assessing the financing conditions.
So there's a pretty big iceberg at 08.
The effectiveness of our measures. So don't worry, I'm sure we'll have plenty to discuss and to review. But as I said, the important meeting at which we will discuss the terms and conditions of the PEP when it comes to its term will be in December. At our December meeting, there will be two things. One is, it could well be that our forecast is actually delivered upon. So we have caught up with the 2 years, and we are back to pre-pandemic 2019 situation, which doesn't mean that we are back to trend of the growth trend that we had in 2019. We are still far away from that in our forecast. And we will have new projections, which will give us a projection not for 2023, but for 2024. So we will have more substance to chew on in order to discuss the terms and conditions of the PEP term. Thank you.
Thank you. And the next question goes to Francesco Ninfole of Milano Finanza. Francesco, please.
Thank you and good afternoon. I'd like to ask 2 questions to President Lagarde. The first, do you fear any kind of contagion from the US in the bond market? And in that sense, will the Fed's decisions on tapering influence your actions? And the second question about fiscal policies. In your opinion, how should fiscal policies be in the coming months? More focused on fiscal consolidation than in the past, or still on supporting economies in an uncertain phase? Thank you.
Well, thank you for your questions. I would preface my answer to your second question with acknowledging that during this crisis, fiscal policy, monetary policy have been reinforcing each other, unlike in previous situation. And the fiscal support that has been extended to all the euro area economies has been critically important. And it has been increased relative to our initial projections. If we look back at what we forecasted in December last year and what has so far been the fiscal impulse and the fiscal stimulus given to the economies, there is a significant difference. It was more than doubled. So fiscal policies have been very important and have supported monetary policy, as I think we have also complemented. So they really worked hand in hand.
How much money do you need to put in SP to retire safe?
The fiscal support has to be continued.
$2 million.
And as I said on previous occasions recently, it is no longer the massive necessary support just across the board to all actors of the economy, as was the case in the beginning of the crisis. It needs to be more targeted, it needs to be more surgical, it needs to be associated with the structural reforms that are so much called for and necessary in some countries. And this is really the point about the recovery and resilience plans and
2 million is all right, and
available to that effect.
That would be like $100,000 a year, right? If you were getting 10%.
Quarters and years to come, in consideration for delivery under the plans, as you know, and we hope that it will facilitate the recovery and it will reduce the risk of divergence between countries and the risk of fragmentation in the recovery process. So a time will come, of course, when this fiscal support will have to be gradually withdrawn, and where the rules that the Europeans will give to themselves once they have renegotiated the Growth and Stability Pact, or whatever they call the terms under which they operate, that time will come. But it is still premature, and we believe that a lot of the good results that we are seeing for the economy and the good reason for the recovery has to do also with monetary policy, of course, and we should take full credit.
Spent way too much time thinking about what I wanted to say on that one.
And this has to be
probably nobody cares.
Because we are much advanced in the process. Recovery has progressed, is rebounding, but we're not there yet. We're not out of the wood. We are not on the green.
We're not out of the wood.
Players will appreciate. We're getting closer, but we're not there yet.
Thank you. Next question goes to Luke Hayton of Market News International. Luke, please, over to you.
Okay. Anyways.
Good afternoon, President.
See, as long as ES is kind of like in this spot right here, it probably doesn't make much sense for me to try and do anything in the NASDAQ. I could maybe try shorting that right there.
In Germany,
Oh, jeez.
ECB's monetary policy. And the second was 5-year forward inflation break-evens are at their highest since 2017, up more than 50 basis points since the beginning of the year, and way more than the shift in inflation break-evens in the US. How much does such a shift affect your perception of the ECB policy path going forward?
Looks like
Thank you so
NASDAQ just
much.
wants to push
the
up.
answer to your first question is simple and
Would you invest in
straightforward.
Chinese
The answer
index?
is no. We had plenty to discuss, and we did not have any discussion.
I think that Chinese stock market probably not the place to be.
The five-year
Man, I hate that question because I really don't like trying to make predictions, and you're really asking me to make a prediction. At the moment, the Chinese stock market does not look like fertile ground.
But it's not the only one.
But whatever. You're changing your vote in the poll. I'm going to leave the poll open, and you can change it until I'm going to let you guys change it until halfway through. Actually, no. Let's close it right when it opens.
And we'll also look at what other institutions.
You guys think higher, huh?
We don't want to be data slave. We are data dependent in our policy determination, but we want to have a look at a whole range of such data to make sure that it's not only directionally in the same vein, but that it's also consistent. And
I don't know what you guys are talking about over here with the gold bars and stuff. What's the follow in that conversation?
Thank you. And today's last question goes to David McHugh.
Oh, hey, are they gonna end early for once?
Thank you.
I'd be so happy.
Dave, can you hear us? There seems to be a connection issue, so then the last question goes to Victor Mendes.
So you can see there, the Treasury is at its high. The 10-year yield is not at its low.
Hi, good afternoon, President Lagarde. My first question is in regards to the self-imposed limits.
You see that? They decoupled a little bit.
Policy in asset purchase programs, especially obviously the
So a change in the basis?
It's true that the ECB sovereign bond holding is having conversion towards the capital key. But
man, if this had happened like 2 months ago, I would have known exactly what that all meant and how it was happening. But now I can't remember any of that stuff.
Closer to the issuer limit, to the 33% limit on the outside.
Were these 2-tick stop loss? No, there was 3-tick target stop. For fun on sim.
QE programs sustainable within ECB rules. And the second question is, whether you had any update.
It seems like it's a little bit too tight for that trade to work, though.
The weaker or highly indebted Southern European countries that are more reliant on ECB support.
See, like right there would maybe be okay. I'll just take one for the heck of it. See.
Well, on your first question, thank you.
I've been having a hard time with the sim.
Will be debated,
like in real life, you would have gotten filled and not and whatnot. It's probably not very accurate trading.
The exact limits in any shape or form, or the capital.
When I'm going for 3 ticks,
all I know is
and they're only trading a dozen contracts for 3 ticks, then my one lot does matter, right?
To be reached, and we will have to use all the instruments that we have available, and we will decide on what terms and conditions.
When you're a tenth of the volume, that would probably matter.
And we will adjust. Accordingly,
more like 30 ticks. Yeah, it was intended to be like the most action sort of a thing.
Other point, what I observe is that those nations that were most affected by the pandemic,
nothing serious,
which are largely countries from the south of Europe, are the ones that are benefiting from the highest volumes of loans and grants under the Next Generation EU, and we very much hope that. With the plans that they have submitted, which have been approved, with the loans and the grants that are already being disbursed and will continue to be so if there is delivery in consideration, then they will be in a much better position to respond to the damage that was suffered. What we can observe, though, is that in relation to tourism, in relation to hospitality services,
10 points is nothing to sneeze. You're right. 10 points is a significant amount in equity indexes.
In our projections. Thank you very much.
Thank you. This concludes today's press conference.
Okay, I'm kind of happy to be done with them, to be honest. I didn't think they said anything all that important. That as time goes on, these press conferences are becoming less and less interesting for some reason. All right, so right here. Very good. There does seem to be a slightly bullish tilt to the NQ right now. Missed it. I don't know if that one was really like... Probably going to be some excursion on that. Yeah, okay. Darn. Good. Oh, man. Did you see that one? Okay, that was the open. I didn't realize. Ah. Oops. Nope, nope, nope. That one goes so fast that I don't even know if the sim how accurate it is or what. Oh man, it was funny. That is really funny. The equity indexes look really strong right now on the open though. Let's bring this down here a little bit. Let's see how much. What is it volume wise? I need to get it to fix itself here a little bit. Woohoo! Oh, that one was so lucky. They went down and bounced to the tick. RJ says, yikes, that's a recipe for disaster. Wait, what is? I risk 3 points to get 15 points? Oh, AO does? Well, AO really is more swing trading. What I don't understand though is when you started out, you said that your win rate was pretty low, and you haven't shown me many losing trades. Are you just taking a lot more than what you're showing? Whoa, wait a second. David Canellis, pretty crazy that Coinbase knew for 6 months that the SEC was gonna get sued if it kept up with Lend. That's over 1 month before it went public via direct listing, so that execs and venture capitals could dump $5.44 billion in stock on retail, and it only discloses it now? What gives? Whoa, what? Oh man, what? Okay, so like I'm really bearish on the cryptocurrency market because of this piece of news that we got it. I guess it came out on Tuesday, but really we heard it on Wednesday, and we talked about it a little bit yesterday. That basically they're saying that they're not going to let them do this lending thing. The SEC says it's a security, and that kind of opens up the door for more strong regulation of the entire market, because really it's the same issue with the tether lending that's out there, and maybe the feds are going to finally do something about it, right? And that move on Tuesday was probably insiders getting that news, and therefore a news-induced flash crash. So that well could be that this week was the top in the cryptocurrency market, but now that it's kind of coming out, the extent of it and everything, it really is really like, wow, they really screwed people over. Like, it's a little insane to think about. Wow, okay, so there was a little bit of a bearish excursion there for a moment, and it seems like they are out. I did it in the center. I shouldn't have put it in the center, huh? Nope. Nah. I think I got something, and then it's like, no, you don't, Sept. That one might not work out so well, yeah. Bum ba dum ba dum ba dum ba dum bum bum. And treasury yields are still right where they were. I don't know. Your broker, well, it's all sim. Those are all sim. I would never trade NQ on my real account. maybe if I had $10,000 in there, and 10,000 more coming, you know. All right, here's what we got to do. So, see, I was saying earlier, but the ECB press conference was going on and everything, that people like to see a train wreck, don't you think? So what we need to do is we need to just, you know, tilt the stream towards Seth is just an awful trader. Because we can get beyond, you know, because I feel like I've shared a lot of stuff with you guys, and you guys that are sitting here watching the stream every day, you don't need my help. A lot of you guys are better traders than me. This is really, at this point, it's mostly entertainment for us, right? So, you know, wouldn't it be more entertaining if if we just pretended that I was an awful trader? I mean, I don't think that I'm a great trader. I think that I'm probably just okay. Sometimes I'm really awful and sometimes I'm really good, right? But if we just set the stream up to be like all of the time, oh, you're so stupid, Seth, come and watch this train wreck. Hey, like that would get more views. I'm just saying. That right there looks a little, nope. Come on. So one of the issues that I'm having in NQ right now, as I'm trying to do this, is adverse excursions, right? Okay. No. So sometimes it'll only go 2, and then when it doesn't happen, they go, goodish. I would probably get I think on most of these, you would probably get some nasty slippage on them. That sucks. Oh, missed it. So, question, how strong can the equity indexes get before the yields have to give it up? What do you think? Are they actually related? Can you talk a little about adverse excursion? So the way that I think of it is there's the spread, right? So if you take a random trade and it's a market order, then because you're giving up the spread, your win rate is not going to be 50%, it's going to be 45%, right? So then you would think, okay, so if I always use limit orders, then shouldn't my win rate always be 55%? No, because of adverse excursion, which means that if you do get filled, if you're at the back of the queue and you do get filled, then there's a slightly higher chance that they're going to go through you. So what's happening to me is I'm picking that up. So like this might be a good example. Let's see if I can get it to happen. Okay. So did you see it came down? Well, it happened so fast, but I had a limit order down there and it immediately went through and stopped me out, right? Okay. When it's a little bit slower, it works out a little bit better for me, but nope. Need 5 points to break even. Yeah, it tends to be 5%, but it depends on the instrument and a bunch of other things. And I'm not exactly sure what the math is that turns it out into 5%, but it's pretty consistent in all of my back testing. So when you're market making, kind of the whole game here is, how do I minimize the adverse excursion, right? So one of the keys is, nope, that one's no good. Okay, one of the keys is finding a spot wherein I'm really confident in just taking the fill. Okay, which tends to mean, for me, like at least when I'm watching NQ right here, I'm trading NQ off of the ES, right? I'm watching for some sort of a move in at the NQ where the ES didn't do anything. No. But do you see, well, on a lot of these, I will get stopped out and then it will go. That's the adverse excursion. Is that Gary's method? I would say that a lot of that is based off of what I know about Gary, but I've never taken his course. So why don't you trade the ZN or ZF? Well, you see I have a swing position on here in the 10-year. I'm trading the micros. You know, I don't know, the 10-year, what I would be doing in the 10-year has been difficult this week, you know. Darn. Nope. 3 ticks is hard. 3 ticks is hard. Nope. Okay, that one worked. Oh, I took like 4 losers in a row there. No good. I still, so this is the issue in NQ, is still that like it is so fast that trying to scalp it as a human, I don't know if it's really ever going to be, that's really ever going to be successful, right? So what's the advantage of being on the front of the queue? So the advantage of being on the front of the queue is that you can get the situation where they tick into the price, but they don't clear it. So especially if it was in the 10-year, for instance, being that first person in the queue is a huge advantage. Like, you can literally, if you were the first person in the queue every time, you could basically just put a bid and an offer at every price and make money. And all you would have to do is occasionally cancel orders when you know that there's some trend coming, like that the probability of informed trading is high. Try the tick enter on the fade. What do you mean by that? Nope. Adverse excursion. See, it could have worked out, but the fill wasn't very good. See, three ticks is just like, I'm betting that at the end of this, no, maybe not. I was gonna say at the end of this, I bet you that it comes out 50-50, but it's not 50-50 right now. I've made a couple of really bad trades. Maybe there could be, you know, if I really worked at this. But there are any disadvantages of being in the front of the queue? No, not really. I don't think so. I would always rather be at the front of the queue than the back of the queue. Nemesis. Oh, that one was lucky. Okay, so that one was lucky, right? There was some adverse excursion, but they didn't go all the way through me. Nope. A little counter trend right now is kind of part of the problem. So am I having trouble just because I'm taking longs and I should be going short? Okay. Oh, whoops. Okay. So far, I've taken about $100 in losses doing this. On Sim, of course. On Sim, of course. Oh, Salim sent me a screenshot. Oh, dude. How did you do that on ES so early? Yeah. Let's see here. It looks like... Oh, no, it was NQ. It looks like you took a... Looks like you took a long and they came down on you, huh? Who trades overnight on here? Well, I think most of us avoid having to be in overnight. But yes, go see how much you paid in commissions after 50-50 strategy. Yeah, totally, Lucas. I'm totally with you. I am not doing this because I think it's a good idea. Just to be clear. Somebody said, hey, it would be really entertaining. And I was like, probably would. I mean, it seems like you guys are finding it entertaining. To try it again right there. Nope. Both of them dashed. Ouch. How does that happen? That's terrible. This spot right here might be good. Come on. Well, that's probably the longest trade that I've had today in NQ. Oh man. I can only imagine what it might do if there was live orders, because it really is like could react to you. All right. Almost that one. This isn't fun anymore. How is it? At the beginning, I was doing really, really great. And now all of a sudden, it's like I'll lose like every time. When are we having the 2K stream? I don't know, man. So at any moment here. Wait. We got to come in here. By the way, I didn't end the poll. I should have ended the poll. You guys think it will be higher. You clearly think it will be higher. Okay. We could come in here. Watch. How do we put this? How do we say I'm a terrible trader and you're gonna watch trader lose millions? That would be a bit too much. Watch trader loses dozens of dollars. Here, you give suggestions. So come, I'll take that off the screen. You give suggestions. What would be the most clickbaity? Oh, your trading is so terrible title for the stream that you can think of. That one wasn't too bad. That one was based more so on trend, though. I had two opportunities and I didn't take them because I thought that they were gonna flip back on him. Traders make at 50K. I'm sure. I highly doubt though that they're doing it the way that I'm trying to do it here. So if I was more serious about this, let's try and do something a little bit more serious, okay? No? It's getting away from me. Okay, so there's 1, 2, 3. Let's work with 5 contracts. 4. Let's try to keep ourselves to 5, but like if something really bad happens, we could allow ourselves to have 10, okay? Yeah, almost. Okay, good. Oh, that one didn't fill? Ah. I'll put one up there, just in case. Okay. Does anyone think that ES could hit Friday's highs? Well, they're already above yesterday's regular session highs and overnight. 24 is kind of the next spot. Actually, we might need to come over here in the volume profile and take a look here. Ooh, this could swing all the way back up to 45.39. That's interesting. Because they're just smashing their ways through the 20s for now. All right. Okay. So see what did I do? I averaged into it, and I was just trying to take little amounts and try and build a position because I'm way more confident in my ability to predict where it's going to go in like the next 5 minutes than I am in my ability to predict where it's going to go in like the next 5 seconds. AO says that's what he's looking for. I think if you trade the extreme in the ZN with the correlation UB and ZB taking into account the context of the day and the news, you can be considered. Yeah, I think you can. I think you can. Is it a long only strategy? No, it's not. I went short too. I am clearly a little bit bullish though, huh? So one thing that we could probably take advantage of here in the NQ is that if we see a bounce off of a price, there's a pretty good chance that within a minute, it will go back to that price and bounce again. And if it's been longer than 90 seconds, then it's no longer a good trade. But see? Oh, you know what? I don't have this set up to, hold on. Trading, or no. Appearance, trade column, include closed P&L. Okay. Now we're good. So now see what we've done, right? My break even point is like way down here. So I have to be like incredibly wrong now. right? How did I do that? I combined my market making with a swing. Or I combined my swing with the market making bait, really. My trading is like losing small over a large amount of trades, and I look for the trade that goes on runner, yeah. Do you do multiple targets and all those sorts of things, though? So no, that we're back to my average position, in fact. Okay. Probably right there on that one. Take another one if they go lower. Okay. So because I took on some inventory, I took on more risk, but okay, so there's a little bit that helps a little bit. Oh, I missed it. I'll take that one. Yeah, maybe there. Ooh, treasuries are coming down. Treasuries are coming down. That was pretty aggressive, in fact, those ticks. Okay, they do not like those rates rising like that at all. Oh no, it's so terrible. Oh no, that's bad. Oh dear. Okay, now we have to go into our emergency amounts. Oh, maybe not. I don't know. Let's let it do its. Let's let it calm down a little bit. They did not like those yields dropping like that, but it looks like the yields are retreating a little bit. Wow. Let's say you have 1 million, I would risk 2% of the capital, enabling me to take 50 contracts, but I would enter 5 contracts, see what happened, to get a foothold, and scale into the rest. Yeah. Well, yeah, I don't think with 50, like, especially, are you saying 50 contracts on ES or on NQ? kind of matters, just because you have to be a way more cautious and selective about how you scale into NQ. AO says yes. Okay, yeah, that seems more reasonable. Yeah, like you scale in 5 at a time. And I would just be looking for, like, some sort of liquidity hole to work off of. Okay, well, so the treasury's definitely moved there. Like the 10-year, well, the 30-year got creamed, man. 30-year got creamed hard. But I don't know if... It doesn't look like that the curve steepened that much. Certainly, my trade is only 15.30. I guess it came back 5 ticks, maybe? Okay. Oh, so it did get a fill there. Good. Good. So from that, by taking on risk below my average position, I was able to increase my average position, right? And this is all basically from risk management and not really. I mean, maybe I have an edge, a longer term edge, in that we feel very confident that equities are going to be somewhat bullish today. If only for the fact of how high they're up, and that the bearishness the past 3 days has been too much. But we shall see. Could easily flip on us, right? Okay. Is that 5? Okay. Also note, though, that what I'm doing is, like, if this ends up being wrong, it's going to be like a real disaster, right? It's where this would work a lot better if I was really scalping a ton through here. Like these institutional traders, when they got the DOM that auto stacks and auto pulls, they're pulling out little bits everywhere. It makes it a lot easier for them to try and build a position and let it ride. Okay. Almost. I'm tempted to add a 6th down here, but probably not too wise. It's starting to the E-mini is starting to turn back quite a bit. So there we go. There we go. Okay. Now I probably just want to let it ride here a little bit, because this is probably, I looks like they're shooting for new highs here, right? Might take one off at the high. Ooh, wow, 1,000? Really? Okay. Okay. You were working it? Wow. It looks good right now. Just remember that what I'm doing is something that, 1, you would need a really big account for, and 2, has a really fat tail. Like if I screwed this up, it would just blow the account, right? If I pick today, like if today it was just all of the sudden going to crash, or let's say a piece of news came out that was really bad for the S&P 500. Biden just got on the stand and he announced that the United States is going into another 2-week lockdown, full lockdown, right? I would be so royally fucked. Technical term there. Trader lingo. True. But when you're doing it on stream, it's entertaining, and it probably looks, to somebody that's new, it probably looks like, this guy is amazing. This guy is amazing. You know what was really going on here, though, is that the market has been very mean to me all week, and they're throwing me a bone a little bit here, is what's really going on. That's what's really going on. Heyo says almost positive for the day. Or are you still down a little bit? I'm interested here in what the treasuries do, because I thought that drop in yields was really fast, probably too fast. But then the market makers were like, no, let's keep it right here. I can't say where it's coming from. One thing I am seeing is that gold is struggling again. At first, it was kind of slightly positive, and they came back up to the 18. Well, let's come back over here. Let me show you, because I think this is kind of crazy over here in gold, right? So when we came in, it was looking okay. There was a little bit of an adverse excursion, and they bounced. But now that the equities market has started trading again, gold has been coming all the way back. I suppose it's not a big deal until like they get below this, let's say 1785 area from before. But there's definitely something going on in the gold market. Dollars also still looking somewhat strong, actually. What about bitcoins? Just sideways over in bitcoins. Okay. Man, how many trades did I take here on this? Okay. So you kind of feel like I want to do something now, NQ is better than today. It was probably one of the worst NQ opens I've ever seen, in the sense that it's more rangy today. So here's the thing. Looking at the 10-year, I just want to know, 07.5 is still higher than it was yesterday. Okay, once you get into 04, that's like lows of yesterday. So it looks like they went and they maybe tested some of the stops on lows, and then they reverted back over here. If the E-mini continues, if the S&P 500 is just an absolute gangbuster day, and the yields do not come down again, then that's really like, what is going on? Then I'm really starting to like get weirded out by what's going on in the treasury market. Come on, almost. Okay. So let's just do a little bit of quick math here. I have taken 28 fills, so 14 trades. So 1,000 divided by 14. Average 71. So let's call it 75. Yeah. Now let's just call it 70. So 14 ticks. So I'm making an average of 14 ticks, which is actually good, right? Because with what we're doing, just based off of randomness, we should expect to make 1 tick per contract, right? From doing that. But if we have some edge, maybe we do better than that. It really does, like the equities are really strong here. They really are. Okay, now NQ came back a lot. So I'm going to increase my position here a little bit. Would be like right there. Damn you, ES. Okay. Now I should wait. I should wait before adding the other two, because there might be a lot more adverse excursion here, right? Or not. I shouldn't even call it adverse excursion. I should just say there could be a lot more bearish action here. You know, just as like a standard pullback sort of a thing. Getting another long signal on ES, but it could be a top signal. And I mean, as I'm doing this, I should just note that I'm not doing this like, oh, you guys should all go long. You're going to make tons of money if you do that, right? This is random. I'm the world's best trader because I make 14 points a trade and wait for the other traders to say that's not being the best trader. No. So you guys didn't, we still haven't, I haven't heard any ideas about what would be the most clickbaity title for the video that we could make about how bad of a trader I am. Wow, you're going to take the other side of a trade on AO? Watch speculator Seth lose his house in a trade. Ah! Oh my gosh, that's funny. I like it. That's really, truly the most clickbaity title that we can give it, I think. Oh, I should have speculator Seth as all one word. That will. See, Alligator agrees with it. I said in the Discord, like, if equities continue to be so bullish and treasuries don't have another drop, then I am really at my wit's end as to what's happening in the bond markets. Because you just got the most bearish signal you could get right now, which is the ECB did pull back on PEPP purchases, right? And the stock market is on a tear, and the bond yields are still low. Like, what is causing this? Where is this coming from? How is this happening? It's insane. Even with it is right now, I'm so surprised that we're still above 04, to be honest. Is it just the refunding? Like, they really want the bonds that badly? Okay. So NQ is a little tad weak here, but No, maybe not. If they had gotten below that 50 there, I was going to start adding, but... AO says the short looks good. It sounds like Ace is bullish, huh? You must be long. You must be swinging along here. Strange, Corral again, USD, gold, CLES. Yeah. Seems more a pretext for profit taking. Could be. The market does what I tell it to. I am the puppet master. To prove it, there will be rain today somewhere on Earth. Oh, hey, did you finally give it to me? Okay. Okay, we'll take one right there. Leverage up. It will rain somewhere on Earth today. I wouldn't be so sure about it. I mean, is it possible that there are days where it didn't rain anywhere on Earth? The internet says no. They're saying it's not possible. Okay, so the internet is saying that it may have actually been possible, but probably not since humans have been on Earth. There may have been a day earlier when there wasn't enough water vapor in the atmosphere, for instance. One, two, three. No. I want this one here. Statistically, is breaking even and getting some better than getting stopped to get a runner someday? I'm not sure that what you're saying, to be honest. So I suppose that I could say it depends on what you're trying to do. So if I'm over here trading the 10-year treasury and I'm trying to take momentum trades and I just went short there at 08, so I'm short 08 and I have the opportunity to go break even. You know, if it starts to pull back off, if I'm scalping or whatever, it starts to pull back off, then it makes sense to break even on it. But I don't do that. I'm always trying to get a little bit more than that, you know. I'm looking for 07.5 to pull and get weak. Holy cow. Kind of looked like that was a pretty negative bar, wasn't it? We are a little bit above, like we're really pushing the stops right now. So it wouldn't surprise me to see a return back to the 20s area to base a little bit before they can gain enough to try and go further. But at the same time, when they do that, they seem to have a tendency to just keep going. Like they get driven by options and it just doesn't stop, you know? So it sure seems like those pullbacks are way deeper in the NQ though, yeah? Oh man. Oh, so can I can add in here, can't I? Okay. Maybe I want to wait for the end. So the another one is 45.21. Maybe I should wait. I don't know. I don't know. The governor of Sweden's central bank compares buying and selling bitcoins to trading stamps. NASDAQ trader says, no, today was really weird on Sept on NQ. Okay. We always thought you were saying it was really weird on Sept. Okay. Yes, I am really weird. Thank you. I appreciate it. Oh my gosh. Okay, so I was watching this video the other day. I was browsing through and I saw that Devin Nash had a new video. Oh, I want to go and watch that video. And the video was about like if you've been streaming for a long time and you feel like you're burnt out. Not that I feel like I get burnt out. Like I always feel like I have energy to come on and stream for some reason. I just don't get tired of it. But sometimes I get really discouraged in my trading, right? Anyways, but he was saying like, okay, so if you get down to this point and you're not really having success, then like the thing is that you have to be interesting. And I'm like, crap. That's never gonna work. And his point was saying, well, you can't just come on and stream. There has to be something about what you do that you're good at or you specialize in that's particularly interesting to people. And maybe you just haven't found it yet, which really isn't the case for me. What I do is unique. Whether it's interesting to people or not is a different question, right? I was like, I'm screwed, aren't I? Okay. That's going to turn back up again. There's them treasuries up at highs again. You got to be kidding me here, man. What is it that the bond market thinks is, why is it doing this? How are they doing this? If the treasuries, this bid gives up, well, let me put it this way. If we were to go back to the lows of the day and we were to start pushing 04, and maybe even better back to 133 even in the 10-year treasury, I bet you there'd be some crazy stops because there's got to be somebody out there pushing this. AO wants the mini to turn. You're going to leave your stop at 45.20? Or I swear to the God that the gullible believe in, I will ask to speak to the manager. You need a very good indicator to do the opposite. There you go. CIQZ, you've got it. He's got it. We gotta play this up, folks. Okay, what's this? Trading floor audio. It would appear former EU Brexit negotiator Barnier has gone native, demanding France regain judicial sovereignty from ECG and ETCHR, and has a referendum on immigration. I can't think where he got these ideas from. Ex-Brexit negotiator Michael Barnier calls for a referendum on non-EU immigration to France and bemoans the loss of legal sovereignty. Well, in Brussels, he always said he was a politician and not a technocrat. That's interesting. That is a little interesting. Yeah, if you got a 20, then you're happy with 10 points. Sure. The concern I have with that ace is that 20, I don't know if we're actually going to get to it. I think at the moment, it looks like you're probably going to be okay, right? But that also kind of looks like a big target out there. Like, if there was going to be like a pullback, that would be like exactly where they would go to and then reverse. So, but you know, I guess sometimes that's just how it works out sometimes. I don't know. So I don't know what the deal is with this comment from Michael Barnier, but everybody on Twitter seems to think that it's really funny he's saying that now. So I don't know. Maybe your Europeans can not going to cry about 10 points. I would cry. You know what? If I was in a trade and I had caught a runner like that and I had lost 10 points on it, I would be like really down on myself. That's probably my problem, man. I'm looking at this and I'm like, okay, I've made some really great strides, but I really am to the point now where being able to deal with my mental and emotional state is probably my biggest problem right now, I think. No, I didn't lose. I'm saying like if I had the opportunity to take a profit and I still got a profit, but it was 10 points less than what I could have gotten, I would be really unhappy. That sort of thing tends to make me unhappy. I've done that so many times in treasuries, man. I remember when I would get like 10 ticks and then it'd come back and I'd only take 1 tick on it. Oh, those were the worst. That's always how it starts. It's like, I'll be trading really great, and then I get one of those, and then it's like the mental state and everything just kind of falls apart for me. Okay, so this never filled. Going to take this one off here, I think. Still have one at the high of the day. Americans step up in times of crisis and should with Biden's social safety net via the Hill opinion article. Oh, never mind. I'm sorry I read that. It was just an opinion article. These treasuries are really frustrating me, man. Why is it sitting there? Who is buying this? Technical question. If I have my stop set up and the power shuts down across the country and it comes back, will the stop get hit? Yes, depending on what kind of a stop it is. Because you can have a synthetic stop. So you can have a stop that your software sets, and if it gets hit, then it will send a market order. Or you can have an exchange side stop. So if it's one that's set on the exchange, it will get hit. Another thing that you should keep in mind is whether your order is a day order or a good till canceled order. That's also important, right? It's just a stop with the end. I think that you're okay. I think that there's a setting somewhere in there with NinjaTrader where you can set the synthetic stop, but I think that by default, that's not the thing. Should look that up. Good till canceled is, yeah. That's what you want. Good deal. So I think I should just let this one do its thing for a bit. So I could separate, yes. Because it's on the exchange. Well, here's the way that I would test it is you put the stop in, you close your platform, you open the platform back up, you should still see the order. And I know this because I had to test all of this stuff for when I was doing for these swings, because I've held this position open for like 3 days now. It's very interesting to me. The 5-year was the one that moved more. Like, look, I've got more. Before we were getting like 10 to 15. Now we've got 20, and this is 40. So I've lost 20 overall. But I don't know if these went lower. I bet this would get 25. This would be 45, and we'll see. The spread has been pretty consistent. I guess actually when I look at it, what happened was after the ECB move, we did steepen. Teeny tiny little bit, and now we've been flat. Okay, so the Treasury's just pierced through a pretty big iceberg, and now you get an iceberg the other way. So that might be supportive of higher rates. Let's see. I feel like I feel a desire to, like, continue taking trades over here in NQ to keep you entertained. But is it that entertaining now? We're doing okay on viewers today. See, the video title, it's not bringing the people in. We don't have a good enough title. See, what if I did this? What if I made a little a new image? And it could be like this. It could be like, how much have we made? We've made in NQ, we're going to make $1,500. So I'm going to be like 1,500 for the day. And then down in here on little teeny tiny letters, it will say Sam in the thumbnail. And that's how he says, okay, I've got the title of the century. Oh man. The title of the century, maybe we should save it for later. for another day. You give it to me now, and then we'll use it another day. We'll use it tomorrow. Use it tomorrow. Watch Jesus Christ's second coming. Oh, no. That would be funny to just, put out just blatantly false clickbait out there. Alien landing live. That would bring in an interesting is an interesting word to use there. He thinks that 45.29 is the high for the day. I think I would take him up on that one. I think we can go. Actually, hold on. Let me do a little research. I see what you're doing, Ace. Although AO has shown us some pretty good stuff so far. I don't know. 35. Yeah. No, totally. I think that's a reasonable bet. I'm gonna say probably 55-60% chance that we will get to 35 today. 45.35. AO says 45.29.50. So I guess I should say 55% chance. You've made it, Seth. You're an NQ billionaire. I'm not out of it yet. I want to make 1,500. I really want to make 1,500 on this, right? Oh, there's another little adverse excursion bit here. Oh, maybe. I could add a third contract right there at my break even. Maybe we should let it come back a little bit though. You want a poll? Okay, let's make a poll. Poll. Hive day, question mark. 49. I'll give you just a little bit of leeway here, AO, and we'll say 45.30. 45.35 plus. I mean, AO does have a slight probability on his side, right? Because the high of the day is likely to be made within the first hour of trading. And there are reasons for that. But this is also the kind of situation where that stat is like most likely to fail. So it's a good question. I kind of feel like that it will be higher, but I suppose I don't have really strong reasons to think that. But I think what Ace is picking up on, because AO has been here a lot while you've been away, Ace, is that he has seemed to make some pretty good calls. But I've also picked up on what you're picking up on, that he seems to think he knows what the market is going to do. Like he acts like, oh, it's definitely going to do that thing, and I know, and you can just follow me in what I do it, and which it doesn't work out that way for sure. Like especially us trying to call a specific high of day like that, like we're doing here, is like, yeah, really hard to do. Like you seem like you're making a prediction that I'm not convinced that we have a very high probability of making all the time. Should have added another contract. Oh well. I haven't seen this greatness. He makes 3. Has he been? Did he make 3 bad trades today? I didn't see. I wasn't paying enough attention. Earlier in the week, he'd had some okay trades in ES. Like, he got most of that bearishness. But I haven't seen it wide enough to be like he's a good trader or not. Well, that's the thing. Ace has shown me statements before. If AO could show me like a year's worth of statements, then maybe we could say something more. Then it'd be like, oh, dude, this guy made X $1,000. Like, maybe we should listen to him. I guess. Damn, Treasuries is still trying to push up. But look, there's a little bit of iceberging going on at 09. It wasn't iceberging. It was just the market makers. Okay, that's curious. Now there's a pretty big ledge on the profile here at 09 and 19 and a quarter here in the 5-year in particular. But note that the 30-year is down a little bit. So we are getting a slight amount. It's only by like a tick, but we are getting a slight amount of steepening here. So I think that we still have a possibility of the 30-year just crashing down here. You see how it's coming back to my position and bouncing off of it? Because the market makers probably have the same break-even spots. Do you see what I mean? That's the inventory cost basis. This is going to be different in NQ, but what the inventory cost basis is trying to do, those lines are trying to say the market maker's average position is probably there. But another way of doing it is if you're just market making, your average position is likely to be pretty close to everybody else's. I made 300 points a day. What? On paper? There you go. Oh, okay. EO says I lost 30 points. Oh, okay. But you made 31 points on the last trade. All right, because so that's another really good point though, AO. And well, it's something to pay attention to, RJ Will. His strategy, he is swinging. His risk reward ratio is like 5-1. So he's probably only going to be right on those like 30% of the time, if that. But that's where I've kind of been impressed, is that he has taken these shorts and he's been right. Like, he was right like 3 or 4 days in a row. It was like, wow, how does he do that? Because with such a risk reward ratio, that's unusual performance for that period, right? But I guess today it's come back and it's come to the more usual mean that you should expect. We incoming dad jokes. We have enough youth. What about a fountain of smart? Liquidity says it's kind of hard for gold to catch a bid without money creation going on. But isn't that what's happening? I don't know, man. Maybe I feel like that what's going on in gold is probably more sentiment and supply based. I think maybe now I can try taking some here. I'll add one there. Darn it. Darn it. I don't know. I think that 45.22 might eventually get touched. I learned something new today. The devil is in the details. So how's that? Oh, wait. Somebody put the Powell head. AO says Roku in 45.25. I'll take that one right there. That oh, did I not get filled down here? Oh, I did not get filled down here. Okay. Well, so I didn't want to take that off, actually. Crap. How am I going to get 1,500 now, guys? Oh, okay, wait. It gave me it back. Okay, cool. We cool. I'll do it like this. Do it like that. And well, we'll take on one there, and then we'll see. At the moment, this looks like that it's likely to go sideways for a little bit longer, maybe until the European close, and then we might see change in the market. I don't know. So it's pretty sideways right now. I will set up a separate private brokerage account and send you. Why would you do that? I would be much more interested in the last 12 months of trading if you could get it. I know that, like, so if you sent it to me, you would get on Discord and you send it to me, is the way that they do it, and I would be the only one that would look at it. But even though I'm the only one that would look at it, you might still want to go through and, like, you know, black out your address and all that sort of stuff. I know that I would. Even I wouldn't trust myself on that sort of a thing. That's just, I'm so paranoid, right? And I know that that's a lot of work for like 12 months of broker statements. But another thing that you could do is, like, you know, put it all into a spreadsheet or something. Can't send my work accounts. Oh, those are work accounts, huh? Work accounts, you say, huh? Huh. Well, now that gets into, wait, who did you tell us that before, that you worked for someone? I think you have come in like a way long time ago and said that you worked for a certain bank or someone such and such. But no, but that wouldn't make any sense, because then why would you be able to set up a private account? Whatever. But really what we're looking to see is, like, just the performance of the system, you know? Like, the thing that I have a hard time with is, like, okay, so it comes in and he says he makes 5-to-1 risk reward, but, like, okay, so with how he does that over the last year, what was truly his average winner and average loser? Is he really just take 5-to-1, and is it like set targets, or is it change? Or, you know, it does, what is his win rate? What is the worst losing streak he's had. You know, all of those sorts of things are things that you really have to be able to look at in order for somebody to determine if that strategy would even be for them. You know what I mean? So, yeah. That's kind of what I'm getting at. Because otherwise, whenever you say something, I can't really comment on it, right? It's just like, okay, well, one of these guys, they think this, but I can't really come in and say, okay, well, in this particular context, he's more or less likely to do well, and this is what he's probably based on. Oh, you work for a family office. Oh, okay. So we basically say you're doing hedge fund work. And didn't you say that you were basing your trading primarily off of the volume profile? Didn't you say that? Did I get the fill? Oh, I did. I did get the fill. Good deal. NQ trying to push there a bit. Unclear if they can dig their way out of the little hole there. I didn't respond. I thought I was going to look over there and I was going to see another comment. Yes, I do use a volume profile. I think that's what you said before. Like, the volume profile thing is interesting because I think that there is an empirical basis for trading off of the volume profile, right? I mean, those distributions, I think that's different than what a random market would do. Oh, you say you do order flow. Okay. That's why I said I would set up a separate account, and 1 year from now, you can decide my performance, because you wouldn't be able to separate out your performance from the family performance, perhaps. I might be. Okay, well, that's fair enough. You know what? You wouldn't even have to do 1 year. Like, let's say 1 month. 1 month is always. I just like to look at broker statements, to be honest. That's really what it comes down to. So I just like to look at statements. So the thing is there you always get so many people that they say, "Oh, I'm the best trader ever," and it's like, okay, prove it. So I've traded both futures and level 2 quotes. Oh, yeah. But if you're using order flow, how are you making a determination like 45.2950 is the high of the day? Or for that matter, like, you know, there's so much further that we're going to go, that sort of a thing. That seems like you're more, you know, that would have to be, when people start throwing out levels out there like that, then I'm immediately thinking technical analysis, right? So otherwise, how do you determine it's going to go to this spot or that spot? Jigsaw with CQG data feeds. Hey, that's what I'd use. Cool. Maybe you're just way better at swinging the E-mini than me. That's probably what it is. Because I tell you what, I've made a couple of good trades on the E-mini, but overall, I find it so hard to trade the E-mini. Especially the past month or so. I've made so many bad trades on the E-mini. All on sim, but Guess says, did anyone else do the yellow? I did I hope you all did the yellow jacket. Otherwise, I don't know if I can let you guys trade. The Gary quiz, yeah. What did you get? What did you get, Gus? Did you get 100%? Please tell me you got 100% on the quiz. I mean, don't feel bad if you didn't. There's some those hard test, tricky questions in there. Oh, you didn't take it yet? No, I think it's... So here's the thing. Oh, I'm reading the document still. Yeah, so here's the thing. I would hope that most of what you read in the Yellow Jacket course is things that you already knew, but maybe you just don't have memorized and like committed to memory as well. But I having gone through it and everything, I really like the way that Gary is going about it. Like, it really is something that's like, if you are new to futures trading, before you ever submit an order, you should pass that Yellow Jacket course. Yeah, I guess says, yes, it is, but I'm learning some things. There you go. Good. Now, remember those product codes. That's the one. That's where on the test you can get screwed up. So there's a couple of trick questions about the product codes, like which letter is it for which month and stuff like that, and like which ones are quarterly and monthly, and yeah, that's what you got to remember. And remember that what is contango and what is contango versus backwardation. That's another one that you might get backwards. Yep. So where do you think we should take this other contract off at? Maybe I should just take them all off at 1,000 because I don't really want to mess with it after the stream, and this was all just for fun anyways. Lucas says yes. I'm glad you agree with me that we should just take it off here at the 59 so that I'm not messing with it during work. I've got to do Kubernetes stuff, which gets confusing. So I have to focus today. Yeah, lock it in. I really do. Oh, it's coming back down. Stop it, NQ. If I had been only like a few seconds earlier, it would have been filled too. That's funny. ES2, where do I need to take this contract now? Where? I still think there's a really good chance that we're going to see a higher high of the day, but it might not be until after the European market close. That's how they've tended to do it lately. Like my picture for today is we will, after the European market close, maybe another rise, but then after that a little bit of a swoon. But then going into the close, I bet you we have one of those crazy gamma melt up type moves things again. At least that's what we've done on past recoveries and this kind of situation and everything. So that's what I'd be looking for. But let's see what it does. Okay, well, I really just don't want to mess with it, so I'm just going to click the flat button. Let's say mistakes were made, but we did okay with it. But tomorrow, I don't know, man. Okay, so what do you guys say? 73% of you think that we'll have a higher high of the day. Okay, we'll see. We'll come back tomorrow. Yeah, I used to profitable. It was okay. It was for fun. I wasn't taking it too seriously. I'm still really frustrated by the treasuries. I mean, it's not too bad. I've made a little bit today, but what the hell is going on over there, man? Why are these holding up? What's holding them up? I can't figure it out. It can't be the equities. Equities look great today. I don't know what to do. I'm going to say ECB tapers, but bonds unimpressed. That's 2 S's in unimpressed, right? I've been trying to trade TN, which is easier to get in and out of than Xen. Oh, really? Maybe I should look at it again. I don't know. I have to say, I really like these micros, even though like the volume and everything isn't very good and the fills and everything, but like as a swing, like I can swing these, and this is a situation where it's like, oh, I was right, but I just wasn't able to hold a wide enough stop in it. Like I don't have that problem anymore. It is just like I'm wrong, and I've been wrong a lot this week, so that's frustrating. But tomorrow, stay profitable.